Hey everyone, and welcome to the PivotBoss Closing Report for January 28th, 2016. I am Frank Ochoa, aka PivotBoss, with follow-up analysis to the current trading session. What we see here is the ES in a daily time frame here, and I've talked about how prices have been rejected at and above 1900. And we saw again the same thing happen today, where price peaked above 1900 for a split second and was immediately rejected back down off that level. And I talked about also, prices being above the CLVN here of 1846, signaling further strength, and this thing continues to play out. And as long as prices remain above this level, expect, at least in the short term, price to push back toward the HVN. However, a break of this level could be coming soon, especially with all the rejections that are going on right here. This is very, very important here, how this thing plays out. Really, either way this thing breaks out, above 1910 or below 1846, you can see how prices have been coiling up 1, 2, 3, 4, 5 days, 6 days, where it's just going sideways here. Eventually, one side or the other is going to give way, and you're going to see the stops come out. And it's going to be a pretty aggressive move. I think this move could be somewhere along the lines of 150 points once we get going, so it could be significant. So watch that area very closely. Above 1910 squeezes back toward 1981 half. Below 1846 opens the door to retesting 1811, the HVN, followed by a push down into 1746. Looking at the intraday time frame, you can see here that price is coiling up and has been coiling up. Again, you can sell right here. This is 1900, and this is when price peaked its head above 1900 and then auctioned all the way back toward HVN here, the MCV in a higher time frame. Again, we also have this level right there, 1903.75, and that's the Fed, the January 27th Fed. It came out right on that time, and so far that level went offered, and a retest of that level basically offered as well. Didn't quite get as high as that level, but that move into it was offered. So right now it tells you that prices are still likely headed lower, especially if we don't see prices hold above these 1865s. Taking MCV offer there would suggest much, much more weakness ahead. So let's not get married to any idea of either way. We have to watch this range for expansion, and once we see it, it's going to be significant. All right, here's a look at the daily time frame of crude oil. Obviously, we've been trending lower here. But prices were stuck right in this little range here for about 4 or 5 sessions. 1, 2, 3, 4 sessions between 33.03 and 29s. And I mentioned the previous session, watch this zone for expansion because we could see a big time move once we get expansion. Well, right when price got to 33.03, we saw a major short squeeze event that took price very close to reaching that 35.25 target. Well, prices weren't able to hold or maintain acceptance at those levels, and we saw a push all the way back. And then you saw bulls come in late in the session and defend here off this zone. But right now, initially, this looks like a big rejection of these price levels. And if we're going to reject prices above the top of this range, that implies that we're likely going to come back and test the opposite side of the range, 27.56, with a shot at seeing further downside price discovery. We do know that we have targets below 27.56, which are going to be 24.35 and 21.46. So those are the next two downside targets to play to. Now, if prices do remain somehow above 33.03, which is the key level, that's the key pivot, then I would believe that they'd attempt to push back into this tail event range here and see if they can build acceptance above 34 and beyond. All right, taking a look at the intraday time frame here. What you see here is price basically coiling after the squeeze event. So 33.03 was right here. You can see the squeeze and then a major short squeeze all the way up. And price comes back to that level and is defended here very, very well. And we saw a little push into the close. So holding above this level would suggest a continuation toward 35 and a retest of the highs. Failing to hold above 33.03 opens up a return to value at 30.65. Okay, looking at gold now, we saw gold come all the way back to 1109.90, which is the previous week's high price. A nice move right back to that zone. So we hit that target up here, we pulled back, we saw buyers come in and defend the 1109.90, and the top of the key range here, 1113. So that 3-year point range right there, basically defended by bulls. It's not a surefire, opportunity to go higher, but that is at least what you would expect. You would expect that on a pullback, you would at least expect bulls to defend on first test. First shot at seeing a continuation into 1141.40. Failure to hold above 1109 opens up a move back toward 1084.80 with a shot to see a return to 1072, which is the MC VPOC, rather composite VPOC of the range. All right, looking at the NQ now. Here's the NQ in a daily time frame. We've been trending lower here, and now prices are kind of coiling within this range. We've seen the rejection of price levels below the 4072 price level, and then now you've seen bulls come in and defend this zone right here so far, which is what you would expect. That's what we expected on the session. We had this event after the close. In the closing report, I talked about the tendency for bulls to want to defend this zone, and that's what's happening right now. However, that support is waning because these bulls aren't getting paid. They're just not getting paid, and instead we're seeing rejections of prices at key levels here. That's very important because that means that if these bulls don't get paid, the downside stops become at risk. And if price pushes through this LVN here, this is going to start a major sell-off where we could see an unwinding of the stops to the tune somewhere of about, say, 350 points. So it could be a huge move, and we could be looking at somewhere around, call it 37.27 with scaling points at 38.93 half. So it could be a major event here, but either way we break could be big. You can see 1, 2, 3, 4, 5, 6 trading days right here, all in the same range. So above 42.56 would squeeze this thing into 44.49. Okay, now taking a look at the intraday time frame for the NQ, what you'll notice right here is that prices are coiling up. Coiling up around 41.75. It's just a range here where you're seeing a lot of this back and forth action, but generally speaking, it's trending lower. And this is the top end of the range here. 4,200 above that zone has been offered. 41.90, that area has been offered. So I would say right now, if prices can't hold above this 41.30, we could be looking at a move back toward recent lows here in the bottom of this channel range. So that could be much lower. So expect for price to likely push downward into the 40.72 LVN. That's going to be the major level to test. I still believe that if bulls can defend this zone, there's still a shot to get higher, but I believe that support is waning, and we could be seeing the next downside event should that level give way. All right, that's it for now. Let's see how this thing plays out heading into the rest of the week. Good luck and trade well.